So today I'll be going over the closed trades for the fourth week of November. So this is covering trades that occurred between November 19th and November 25th. And I'll be reviewing all the trades that were placed in the Crusher portfolio, the ESTY futures, the Iron Condor, the Day Trader, and the Bearish Trader portfolios. So overall it was a really good week for us. The Crusher and ESTY futures portfolios, both of those were profitable. And before I get too far ahead of myself though, I'll just go over the disclaimer. Feel free to pause this portion of the video and read through the disclaimer. Keep in mind that futures and options trading is not for everyone. It involves substantial risk of loss. Also, past performance is not indicative of future performance. And keep in mind that we are a third-party trading system developer. We're not registered CTAs, so we do not control client accounts. We simply sell the license to use the algorithms. So my company offers a fully automated trading system that trades in the futures market. And overall, like I said, we did really good this week. Two of the packages, the Crusher and the ESTY futures, the ones that trade the most algorithms, they were profitable. We do trade 7 trading strategies, all of which are traded independently, but together are shown in the portfolios. So our flagship portfolio is the S&P Crusher, and like I said, it trades 7 trading strategies. And the idea behind trading 7 strategies is that we look to have a few algorithms that do really good when the market goes higher, a few that do good when it goes sideways, and a few that do good when it goes lower. And so that's kind of our basic design methodology. And I'd like to just kind of invite you to watch the one of the videos we have that covers our design methodology in more detail. We also have videos on each strategy that you can see on the website, and then some educational videos. And then we also do these, or I do these reviews that we shoot to do those once a week, where we cover all the trades that were placed. So I'll be doing that in this video. I'll be going over every trade that was placed this week. And first though, I'd like to just kind of go over the highlights. So the momentum algorithm continued its amazing run. It hasn't had a losing trade, I don't think, this month. But let's go to the chart, and I'll kind of walk you through it. But first, so what you're looking at here is my TradeStation platform, and you'll see a total of 1, 2, 3, 4, 5, 6 charts. So each chart represents one of the trading strategies that are traded in the S&P Crusher. This one up here is the momentum algorithm, and it also has the covered calls. So there's really 2 algorithms overlaid on this chart. This one here is the morning gap day trade. This one here is the treasury note algorithm. This one here is the iron condors. This one is the breakout day trade. And then this one is the day trade short. But talking about kind of the highlight of the week, really is the continued run that we've seen on the momentum algorithm. This is the one that's designed to do well when the market goes higher. But this is a chart of the S&P 500 and of the futures, and so this bottom chart here is actually the VIX, and I overlaid the VIX on this chart because the covered call algorithm uses it. But as you can kind of see here, in each one of these kind of blue dotted lines represents a winning trade that we had this week. And so we had a winning trade at the close on Friday, another winning trade that got out kind of the day before. But if you look at the date down here, so you see 11/18, so this is Friday of last week, and then this is Monday. But coming into Monday, we had a gap up, and so we got out of that trade we were in with a nice gain, and then we got right back in on Monday, got out on Tuesday, got back in on Tuesday, and then got out on Friday when the market rallied a little bit. I'm sorry, this was Thursday, the half day, and then on Friday we got back in and got out that same day. So there's been a like I said, this has been a really good run on the momentum algorithm, and it's really what's been driving the profits that we've seen the last couple weeks. So let me go back to this slide though. Yeah, and so this is just a picture of this week that we kind of were already looking at. And so because of this algorithm, the S&P Crusher and the ES2Y futures algorithms, or the portfolios, experienced really good gains. Okay, so now we're going to look at every trade and talk about the profit loss that we saw on the S&P Crusher for this week. So the S&P Crusher is our flagship portfolio, and it trades 7 algorithms concurrently. And if you want to see the details on the Crusher, then I recommend you watch the video that I put together that talks about the Crusher in more detail. In this video though, we're just talking about the highlights of the week, and so I'd like to begin by just I guess talking about how we did overall for the week on this algorithm. So this algorithm, or this portfolio, trades on $30,000 increments. So for every $30,000 in someone's account, they can trade 1 unit. And so what we saw this week, if you add up all the trades, and we had let's see, 4, 5, 6, 7, 8, 9, about 10 trades, and the total gain for those 10 trades was $262 per 30,000 traded, which is almost 1%. And so overall this portfolio did pretty good. You can see every trade that was placed. So these swing trade BF, that's the momentum trade. It really stands for swing trade bullfire, which was kind of the old name we had for that algorithm. The BF covered calls is just the bullfire covered calls, and you'll see the one trade here. So you have these 4 swing trade BF trades, and I'll look at those first. And all 4 were winners, and so you see the profit loss on the side here. And then the protection, those trades don't have protection. That's just for the options trades on the Iron Condor. And the slippage is marked as 0 because we use the actual fills on for the trading account. And if you're looking at the website, and you'll see the entire trade list going back to 03. Just keep in mind that those trades are marked as hypothetical back-tested because the majority of them are. But as we go to this kind of new formatting where we're showing the live trades, you'll see the slippage marked as 0. So that's why the slippage is 0. And then the commission is just the commission that the broker charges for each trade. So we've added all that in, and the profit loss is shown in this column here. But so we had 4 winning bullfire trades, and so let's look at those first. And we kind of already briefly looked at them, but those are these 4 trades here. So when we close out a trade is when we add it to our trade list. So on Monday we closed out this trade here. That was the first one that we saw, and then this was the second trade that we closed out with a gain, the third one, and then the fourth one was kind of at the close on Friday of last week. Okay, and real quick, I'll also talk about the bullfire covered call. So this trade was actually at a loss, so we took a loss of about $130. That trade is this one here. So on Monday, when we get into the bullfire or the momentum algorithm, we also sell a covered call against it. And so what that means is that we prefer that the S&P would close below our strike price, but in some ways we don't, because it's kind of a weird situation where we sell the covered call, but we're also long the futures, and so the futures can take gains like you see here, but then there's also this this kind of 5th trade, which is the covered call. So we sell the call, and in this case the S&P closed at about 22.10, so about 5 points above our strike price, and we collected actually let's look and see to make sure I get the right one. So we collected 2.4 points in premium, and so the loss on that trade was about 2.6 points, because basically the option expired worth $5, but we collected 5 points, but we collected 2.4 points. And so to figure out what the final profit or loss was on the covered call, you just take 5, the amount that the option is worth, and then subtract out the amount of premium we collected, 2.4, which gives you 2.6, and then each point is $50, and so that's how you get the 130. What you'll see though is even with this loss of 130 on the covered calls, the gains on the momentum algorithm are quite a bit above that. So like on this first trade, on that gap up, it made 363. On the second one, it made 338. And on the third one, it made 200. And on the fourth one, 175. So if you add up those 4 trades and then take out 130, that's kind of the total result of the bullfire plus the covered calls. And so it did really well. Now, if the market had just kind of traded sideways and maybe sold off a little bit, then the call would have been profitable, but then we wouldn't have had this gain. And so it really is a strategy that combined does really well when the market goes higher in the back testing and so far in the live trades that we've seen. And if the market sells off and goes lower, then we still at times will take gains on the futures trade, because it might jump in kind of like it did here, get out on a spike up, and then the market sells off. But if it does that, then the covered calls could still be profitable, and so that's why we do the covered calls, because they help buffer against the downside. Now, I do have a video on the momentum and covered calls. It's actually a pretty long video, and I go over the details of why we do the covered calls. But again, this is just a review of this week's performance, and so this is kind of the highlight of the week is this algorithm performance, and this is the main reason why the 2 larger portfolios that we have did so well. So let me go back here, and what we can do now is we'll talk about these the day trades that we had. Okay, so these 2 trades right here, this day trade B3, and then you see it again right here, day trade B3. These are this is basically the breakout long day trade algorithm, and it had 2 trades. So the first one was on the 21st of November, and we got in at 21.91, got out at 21.94.25. So it saw a gain, but then the second one took a loss. We got in at 2200, and then it got stopped out at 21.93. If I go back to the chart, I'll show you those trades. Okay, so that's these 2 trades here. So this is the actually, I'm sorry, those are the ones from last week. Let me kind of scoot over a little bit. Here they are. So this was a trade from last week that I talked about in the previous video I did on our performance for the 3rd week of November, but we're talking about the 4th week, so that's this one here. So on the 21st, we got in on this gap up, and it looked like we were about to get stopped out of that trade, but it never hit our stop, and then it just kind of took off. So it ended up being a pretty good trade that was profitable, and that's really all that matters in the end. I mean, during the day, if someone's watching this, then they might see it go down and be a little concerned. Sometimes it will get stopped out though, but in this case it didn't, and we ended up getting out with a gain. The next day it triggered again. We had a gap up followed by a little bit of strength in the morning, and so the algorithm automatically got back in, and it did get stopped out in this case. And so this is an example of how the algorithms are definitely not perfect. We don't win every trade. We do take losses, and this is a good example of that. But again, there's a reason why we trade 7 algorithms. So even though we took losses on this trade, the gains from the other algorithms, the momentum one in particular, are able to offset losses like these ones here. And so overall, this algorithm, it had these 2 trades here. This one that you see over here on the 24th. So this is one that the people on TradeStation had the option of taking this, but because of the half days, we without execution brokers, we don't take these trades, and so that's kind of what that little blip is there. But the overall, the breakout algorithm, it did take a loss. If you take this gain plus this one, it was at a net loss, and so it didn't do as well as it did the previous week. But if you look at the entire month of November, then the breakout day trade algorithm actually is done really well, primarily because it had this trade here that was a winner, this trade here, and then I think there was another nice winner, yeah, right here on the 7th. So when it wins, it usually wins quite a bit more than it loses, because it is kind of swinging for the fences, you could say. And I have a video again on this algorithm alone where I go over more details on it. So if you're curious about this algorithm, just watch the strategy video that we have on the day trade breakout algorithm. Okay, so let's go back to the trade list. And so we've talked about the covered calls, we talked about the momentum bullfire, we talked about the day trade B3. The next one we can talk about is this day trade short algorithm. This one also took a loss, and so let's look at that one real quick. Okay, so for November, this algorithm only has had one trade, and we happen to get into it on the 23rd of November on the weakness that the market saw. We went short, and then the market pretty much rallied right after that, and we ended up getting stopped out. Again, this is why we trade multiple algorithms together, so that if one of them does bad, then the other one, its gains usually make up for it. And so think of it as these 7 algorithms trading independently. And you know, when the market's rallying like this, we obviously prefer not to get into any short trades, but because it is an automated trading system built 100% on technical analysis, then it will take trades on occasion that, when you see it take it, do make you a little bit nervous. And one thing I'll add though is that usually the best trades are the ones that make you the most nervous. So for example, on the 11th of October, the market saw a gap down, and you know, I remember when we went short here, it always makes you nervous because it feels like the market already dropped a lot, and you know, how much lower can it really go? A lot of people might have, I don't know, drawn a trend line here maybe and said that you should get out when it hits that resistance, but this is purely, you know, algorithmic trading system, and so it's looking at its own set of parameters, and when it takes a trade like this, and usually the more nervous I feel about the trade, usually it ends up being the best. It's not always the case, but generally speaking, I think that's why most day traders struggle, is because they will usually take the trades that are a little bit easier to take on their emotions, which usually happen to be the wrong trades, and so you know, they end up taking losing trades. With an algorithmic trading system though, your emotions aren't involved, because it'll just take the trade no matter how you're feeling, and so usually those are the best trades. But this week though, it didn't work out as well. We got stopped out of this trade. But again, the gains from the other algorithms were enough to offset these losses. Okay, so let's go back to this slide, and we'll talk about the last algorithm that had a trade, and that's the iron condor. So the iron condor is, again, we have a video on that strategy alone if you want to see the details, but this week it ended up placing a trade. We sold the puts at 21.90 and the calls at 22.05, and this is a little bit tighter spread than we usually have. It's really only a 15-point spread, and that's because as the volatility drops, we're able to collect less premium, and so we have to tighten up the strike price. But the options expired on Friday at 22.10, and yeah, so here is the short put, which expired 100% out of the money. and then this other one is the short call, which was actually the same as the covered call, and so it took a loss of about 130. And when you add up these two trades together, and then you add in the protection and the commission, it actually was still profitable, but just kind of barely. So for the most part, it was kind of a break-even trade. And let's go to the chart, and I'll show you why that's why I consider that a pretty good trade. The reason why is because, again, this algorithm, its whole purpose is to outperform in sideways moving markets. And what happened is, when we got into the trade, the market, it pretty much rallied, and so the fact that we were kind of break even on the trade, or actually just slightly profitable, shows, in my opinion, why this algorithm is so powerful. Is because even if we're wrong and it closes above our call price or below our put price, we have to be wrong by quite a bit for it to really be a loss. And so the majority of the time, it does close in between this range, or kind of just barely out of it. And when it does that, it's usually a really good trade for us that that has a really good profit. If we're wrong, then we have to be wrong by a lot. I guess that's the point. And so so if we can have this algorithm do good when the market goes sideways, and that's about a third of the time in the back testing where the market goes in the sideways movement that we consider sideways, which is basically a loss of between 4 points and a gain of 30 points on the S&P. The back testing, that's about a third of the time. So if a third of the time we expect this to be extremely profitable, and then the periods where we're wrong, it's either a slight gain still, like it was this week, or maybe a small loss. And then when it goes in the contrary directions, it's also hopefully going to be small gain or small loss. And so when you put that together, it's pretty solid. So the market rallied, and so this algorithm just kind of had a small gain. For the month of November, though, this algorithm has done really well so far. And I talked about this trade last week, and then the trade before that was also very profitable because it closed just barely above our call. And so we were 100% profitable on the put, and then slightly profitable on the call. But so for this week, though, it was just kind of barely. I think it was a $9 gain when you add up these two, the two legs of the iron condor. Okay, so let's go back to this. So that's kind of covered all the trades that we saw. The only algorithm that did not trade is the morning gap short algorithm. That's the one on the top here, and it did not have any trades. And so, oh, and also the treasury note algorithm. That's the one down here, and as the treasury note, the 10-year continues to sell off, we've been safe on the sideline with this algorithm. So it's doing the right thing by not being in a trade as the market goes lower, as the 10-year goes lower. And again, the 10-year usually trades kind of opposite to the S&P. As you kind of see this, the last few days, the S&P's gone higher, and our momentum algorithm has taken advantage of that. And then the 10-year note has gone lower. And this is the algorithm that we have for kind of the bear market conditions. When the S&P goes lower, usually the 10-year will go higher. And this is a long 10-year trade that we take. And so that's kind of our hedge against the downside is by going long the 10-year. The market's been rallying, though. The 10-year's been going down, and we've been safe on the sideline with this trade. Okay, so I think that covers all the trades this week. So let's go back to this, and I'll just talk about the summary again. So for the S&P Crusher, when you add up all these trades plus the commission, the slippage, and the protection, we had a gain of $262 per 30K traded. So it's a gain of almost 1%. So it was an okay week for us. And anytime we're profitable, then obviously we're happy. The ES2Y futures portfolio, this is our kind of second most popular portfolio. It's very similar to the Crusher. So the Crusher trades all 7 strategies. This one trades 6 of them. So the only one it doesn't trade is the Iron Condor. So if you look here, you see this Iron Condor trade on the Crusher, and then if you go to the ESTY, you don't see that trade because it's not part of this portfolio. But so when you add up all these trades, the gain was 253 for this week. Yeah, and so the Crusher was 262, the ESTY was 253, so it shows that it's just a little bit lower because you didn't have that small gain on the Iron Condor. However, this package or this portfolio trades in $20,000 increments. Because there's no Iron Condor trade, it requires less margin. And since this is traded on a 20K account size, then the gain is $253, but on a percent basis it's a little bit higher. And with all these, I just want to emphasize that past performance is not indicative of future performance, and that trading futures and options does involve substantial risk of loss. So I'm highlighting all the positive here, but just keep in mind that trading futures it's not for everyone. We did have a really good week this week though, with both of our 2 kind of bigger portfolios doing really well. Last week was also really good, so combined we're doing okay in November so far. So let's look at some of the other portfolios though. The Iron Condor trades only the Iron Condors, and this package is for someone that just wants to kind of sell options. Generally speaking, we don't I don't want to say we don't recommend someone only trade this, but if someone has the capital to trade one of the other portfolios, either the ESTY futures or the S&P Crusher, we're not allowed to give advice, so don't take it as kind of personal advice, just more from the developer to the people that are watching this video. It's my personal opinion that the Crusher and the ESTY futures are better diversified, and so I guess I'll just leave it at that. But the Iron Condor, it can be traded alone, and there are a few people that do it. The advantage of doing the Iron Condor alone is that you only need 10,000 in the account to trade it, because it's only trading one algorithm and it just takes this Iron Condor position. But for this week it was up $9, so that's about 0.1%. So basically flat for this month. Let's look at the day trader. The day trader just trades the day trade algorithms, and it also can trade on a $10,000 account because it uses day trade margin. The main reason why someone might do the day trader is because it does not hold positions overnight. It trades only the day trades, and so in some ways that is lower risk. However, it's not as diversified as the other portfolios, and so so this is kind of what happens. Is it can do really well when the day trade algorithms do well, but if they don't do well, then you don't have some of the other buffers that might help compensate for the losses here. Let's look at the bearish trader. So this portfolio only trades the more bearish, the 4 algorithms that do good in bear market conditions based on the backtesting. And so so this one also took losses because it's not trading the kind of long biased algorithms, the momentum and the Iron Condor. But we do have this portfolio for people that prefer to only trade the bearish algorithms. Maybe they're expecting the market to go into a bear market real soon, and so they want to be prepared for that. But the one comment I'll make on that though is that the S&P Crusher, our flagship portfolio, it does have the 4 bear market algorithms in it, and so if we go into a bear market, what the expectations would be is that the momentum / swing trade BF algorithm and the Iron Condor and the day trade long algorithm, they just won't trigger as much, and so they hopefully won't take a lot of losses. And meanwhile, the algorithms that do good in bear markets should do really well and kind of do much better than the long algorithms will have done in those periods, hopefully. And so that's just kind of our methodology. You know, we have 7 algorithms that trade independently, and each one has different expectations for different market conditions. And when you put it all together, we have what we feel is a really good diversified portfolio of algorithms that should continue to do well, kind of no matter if the market goes up, down, or sideways. And real quick on the down market conditions, in the back testing, the Treasury note algorithm does really well. The morning gap short algorithm does good. The short day trade algorithm does good, and then also the covered calls do good. And so we feel that we have a really good balance, and the idea is that we want to see really big gains on the algorithms that are designed for the current market conditions, and then see much smaller losses or maybe still some gains on the algorithms that are contrary to that. And this week is a great example of that. Last week was an even better one, where we were up pretty huge on the Crusher last week. This week we're still up about 1%, which is good, and it just adds to the gains that we've seen in November. But it does show how the algorithms work together. So the market's been going higher, and we've seen gains even though we have 4 kind of more bear market algorithms trading. So I think that's probably all that I had. And yeah, so if you have any questions, feel free to call us. You can email us at sales@AlgorithmicTrading.net. We'd love to give you a live demo and kind of show you more details. And I just want to kind of close and emphasize that trading futures and options involves substantial risk of loss. It's not appropriate for all investors. We've been looking at live trades with live fills from the broker accounts, so keep in mind that past performance is not indicative of future performance. So just because we had a good week this week and last week, it doesn't guarantee that next week will be good. And so I hope that helps, and have a great week, and I think I'll close with that. Okay, bye-bye.